Hey everyone, welcome back to the Real Estate Market Minute. I'm Chen with Macross Group. I'm here with your weekly look at what's happening in Southern California real estate. This week we've got four stories worth your attention: a surprising jump in pending home sales, a brand new federal housing law, some encouraging signs on the sales front, and what could be coming in the second half of the year. Let's dive in. First up, pending home sales. Nationally, pending sales rose 1.3% from the week before, hitting their highest level in 6 weeks. So, what's driving that? Mortgage rates. The weekly average rate briefly dipped to 6.43% on July 2nd, its lowest point in 6 weeks, which pushed the median monthly housing payment down to $2,598. Now, here's the catch: that dip didn't last. Rates bounced back up to a daily average of 6.68% by July 8th. Meanwhile, home prices are still holding firm. The median sale price rose 2.2% year over year. And on the supply side, new listings actually fell 2.5% week over week to their lowest level since January. Here's my take: even a brief dip in rates was enough to bring buyers off the sidelines. That tells you just how sensitive today's market is to affordability, even small week-to-week shifts. Our second story is a big one. A sweeping new federal housing law, called the 21st Century Road to Housing Act, officially became law on July 10th. It's being called the largest housing affordability bill in decades, and it covers nearly 50 individual housing measures. A few highlights. It creates a $200 million grant pool to encourage cities to remove restrictive zoning laws. It sets up a new HUD pilot program aimed at expanding access to small-dollar mortgages, and it includes bans on large-scale institutional buying, meaning Wall Street firms and major corporate investors will be restricted from buying up single-family homes en masse. This is one of the broadest federal housing bills we've seen in years. It's worth keeping an eye on as local cities decide how and whether they respond to these new incentives. Next, let's talk about what might be coming for home sales overall. If the market has felt a little quiet this year, you're not imagining it, but there are some encouraging signs. Mortgage rate lock volume, which is a leading indicator of future home sales, was up 10% from May and up 14% compared to last June. To hit the 4.9 million home sales forecast for all of 2026, the second half of the year would need to average around 434,000 sales per month, close to matching May, the strongest month so far this year. And there's a generational shift happening too. Gen Z accounted for 1 in 5 purchase rate locks in the second quarter of 2026, the largest share on record for that generation. Rate locks are a leading indicator, and that growing Gen Z presence is one of the more interesting long-term trends we're tracking in today's market. Finally, let's look ahead. Mortgage rates and oil prices have historically tended to move together, and the U.S. Energy Information Administration expects oil prices to trend downward. If that holds, along with cooling inflation, mortgage rates could ease somewhat in the second half of the year. On the price side, forecasters are still projecting home prices to rise, not fall, in 2026, with an average forecast of about 2.3% growth for the year. Right now, the Federal Housing Finance Agency data shows prices already up about 1.7% nationally year over year. Keep in mind, these are forecasts and they vary by source. They're a useful gauge of where experts think things are headed, not a promise of what will happen in any specific neighborhood. So to wrap up, pending sales just hit a 6-week high. A major new housing law is now in effect. Rate lock activity suggests more sales could be ahead, and most forecasters still expect modest price growth through the rest of 2026. As always, this is educational information only. Every situation is different, so if you're thinking about buying or selling, it's worth talking through your specific circumstances with a professional. If you want to keep up with what's happening in the Southern California market, follow us on Facebook, Instagram, YouTube, X, and LinkedIn. Drop a comment below if you have a topic you'd like us to cover or a question about your local market. We read everyone. Thanks for watching, and we'll see you next week on Real Estate Market Minute.